The Dow Jones Industrial Average on Wednesday crossed the psychologically important 20,000 level for the first time, with the S&P 500 and NASDAQ also trading in record territory.
I'm looking at the stock market at 20,100, and I'm wondering, you're a financial person, you think we go up some more from here? What do you say?
And what could bring it down?
Our financial institutions are strong.
Okay, Peter writes, should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no. Bear Stearns is fine. Do not take your money out. This is real. Look, if there's one takeaway other than the plus 400 somewhere, Bear Stearns is not in trouble. I mean, if anything, they're more likely to be taken over. Don't move your money from Bear. That's just being silly. Don't be silly.
Bear Stearns was in a death spiral, and the Fed brokered its sale.
The worst financial crisis in modern times. Certainly the largest financial disaster in decades in this country, and perhaps the end of an era in American business.
And none of the experts or leaders or talking heads had a clue it was coming. But there were some who saw it coming. While the whole world was having a big old party, a few outsiders and weirdos saw what no one else could.
Peter Schiff, an expert on the economy, he forecast the financial crisis of 2008. Not only didn't anybody listen to him, a lot of people actually laughed at him.
People can't sell their house. The inventories are exploding all over the country. Houses are on the market for 6 months a year. There's no bidders. The prices are going to fall through the floor.
These stimulus checks aren't going to change it. Who's laughing?
Okay, well, you know,
I am. At you.
But you're just way off base. There is nothing out there that tells us we're going to have a nice slowdown, but it's not going to be a crash.
Let me ask you this.
You have been mocked on all of these financial shows going back to 2005.
Oh, my God.
The stock market, not only did we trade above 20,000, finally today, the first time after flirting with it for so long, we finally not only got above 20,000, but we closed above 20,000. In fact, Donald Trump is so excited that the Dow's at 20,000 that he actually tweeted out a comment. He tweeted out a United AP press story. The story says Dow Jones Industrial Average trades over 20,000 for the first time. Latest milestone in record-setting drive. To which Donald Trump, president of these United States, tweets out, great, Dow 20K. Now, if the Dow had crossed 20,000 during the campaign, during the election cycle, before he was president, he would have said, big bubble, big fat ugly bubble, look out, this is a phony market, it's propped up, it's going to come down when interest rates go up, this is going to get ugly, don't believe the Dow. And he would have been criticizing the Dow.
Believe me, we're in a bubble right now. And the only thing that looks good is the stock market. But if you raise interest rates even a little bit, that's going to come crashing down. We are in a big, fat, ugly bubble. And we better be awfully careful.
Now he loves it. It's great, right? This is huge. This is incredible. He's taking credit for it. Hey, the Dow is at 2,000 because of me. I'm president. Things are good, right? It's a bubble. If it was a big, fat, ugly bubble when it was Barack Obama's bubble, now that it's Donald Trump's bubble, it doesn't change the characteristics, the nature. It's still a bubble. If it was a bubble then, it's a bubble now. Now, if Donald Trump no longer thinks the stock market is a bubble, well, was he just lying when he was campaigning? Was he just calling it a bubble because it was politically expedient, but it was really a bull market? You know, I guess a bubble is in the eye of the beholder, right? When it's your bubble, it's a bull market. When it's somebody else's bubble, well, then it's a bubble. Well, if it walks like a bubble, talks like a bubble, quacks like a bubble, it is a bubble, and the big fat ugly bubble is bigger, fatter, and uglier now than ever before. In fact, Trump, when he talked about the stock market bubble as a candidate, said, when interest rates go up, that's going to be a problem. Interest rates are going up. And those people who are so bullish on the Dow, the Dow is above 20,000, but it is very expensive on a PE basis. But a lot is changing, and these changes are not fundamentally good for the stock market. What's been driving the stock market? Well, one thing has been outsourcing, right? Companies laying off American workers, shutting down expensive capacity in the United States, opening up offices or contracting, outsourcing in other countries, reducing their costs. Companies have been growing their earnings by outsourcing, right? They've been keeping their costs down. That's helped the stock market because it's lowering your costs. It also keeps consumer prices down, but it also keeps profits up of U.S. companies. Also, what's been driving the stock market? Share buybacks. Where does that come from? Debt issuance, cheap money. Artificially low interest rates allows corporations to borrow a lot of money and then buy back stock. And of course, during the era of plentiful, cheap money, we've had a bull market in bonds, right? Financial assets have been gaining in value, bond prices rising. That helps the stock market. And of course, as interest rates go down, more people want to buy stocks because there's less yield in owning bonds. So people go for dividend paying stocks. You know, stock market valuations are higher. The lower the interest rate is, the higher the present value of the earnings from that company. So everything's been a function of cheap money or cheap foreign imports. All of that is coming to an end, whether it comes to an end naturally or because we bring it on ourselves as a result of policy coming out of the Trump administration. What does Trump want to do? Well, first of all, he wants us to hire America and buy America. That means no more outsourcing. That means corporations will not be able to drive their earnings by driving their production offshore. If anything, he's trying to encourage them to, bring back some of the production domestically, which is going to mean it's going to be more expensive. Even if we succeed in rolling back some regulation, it's not going to be enough to make the U.S. domestic production more competitive than the global production. I mean, that's why companies left the U.S. in the first place. And it's not going to be enough as far as just some deregulation to the extent that we actually get it. I don't think that in and of itself is going to be enough to tip the balance in favor of domestic production. The other thing that's going to happen is maybe there'll be some tariffs. Maybe there'll be a border tax, a border reduction tax, or a tariff, which automatically makes imports more expensive. And a lot of companies, even if they manufacture here, they import their components, the parts, the raw materials. And if all that stuff is more expensive, it's going to diminish corporate profits and it's going to force corporations to raise prices. So now you're going to have falling profits and you're going to have rising prices. And what's going to happen to the bond market? Bond market's going down. If we're going to have higher inflation, which we're getting, and look at commodity prices. I think zinc prices are up something like 80% in the last year. Look, all these industrial metal prices are going up. Energy prices are going up. Agriculture is going up. And this is just the beginning. And as the dollar starts to go down, and we're flirting with a new bear market in the dollar. We're going to have new bear market in bonds. So now we're going to have rising inflation. And we're going to have a falling dollar. And that is not the environment that's conducive for U.S. stocks, right? The U.S. stock market did good when we had falling inflation and a bull market in bonds, falling interest rates, and the American consumer could rely on cheap money and cheap imports. Well, those pillars, right? Those pillars of this bubble economy are going away. Imports aren't going to be so cheap anymore. They're going to be more expensive. Interest rates are going to go up. Your home mortgage is going to get more expensive. Those cheap 0% financing for automobiles, that's going away. All of this dynamic is changing. And so if we're now going to have a bear market in bonds, a bear market in dollar, rising inflation, rising interest rates, what's going to work? Commodities are going to work. Gold is going to work. Emerging markets are going to work. Foreign stocks are going to work, right? And that's why they are working. I mean, last year was the beginning, right? Most people don't realize how the U.S. market underperformed last year because they just focus on the big spike at the end of the year and the fact that Dow's at 2,000. But even with that spike, the U.S. underperformed. And this was the first time in many years that was the case because the U.S. was the only game in town for many, many years. And that's despite the fact that the dollar did hit a new high in the post-Trump election. But it has been surrendering those gains all year. We're still a little bit above the level we were at the day after Trump won, but I think it's only a matter of time until we take that out. And the question is, how much longer will the stock market be able to ignore the negative fundamentals for the stock market? Because rising interest rates, rising inflation, ultimately falling profits, and then higher discount rates are going to be negative for stocks. A lot of people also, I see, comments on some of these video blogs or Facebook, I got to give Trump a chance. I got to see what he's going to do. Look, I mean, I voted for him, and I talked about that when he was a candidate as to why I thought he would be better to have as a president than Hillary Clinton.
Who do you think would be best for the economy?
Between Hillary Clinton and Donald Trump, I would take my chances on Trump, because Trump could be a great president or he might be an awful president. Hillary Clinton is going to be an awful president. So you might as well take a chance on Donald Trump. A lot of the things that he says I agree with. Some of the things I don't, but I don't even know if Donald Trump agrees with some of the things he's saying, because he may just be saying things because it's good politics. But a President Trump may be very different than a candidate.
But I am not, so Pollyannic to believe that just because Donald Trump is president, that all these problems are going to magically go away. I know they can't magically go away. I know there's only one way to make them go away, and it's going to involve the Dow Jones going down, not up. The Dow going up means that we're getting further away from solving the problem, because interest rates have to go way up. That's the only way we're going to solve these problems, because we have to have legitimate savings. We can't just have the central banks creating money. And in order to have legitimate savings, we're going to have Americans to stop spending, and we're going to have to deflate these asset bubbles. And I know to have real meaningful tax relief, it's only possible if we have dramatic cuts in government spending, and we're not going to get that. I mean, yes, Donald Trump is talking about cutting some spending. Maybe he'll succeed in those discretionary areas. Maybe he won't. I don't know. But he's also talking about increasing spending in other areas. And it's far more likely that he'll get the spending increases than the spending cuts. So it's not about I'm not giving him a chance. I understand the real nature of this problem. And to me, the attitude that Trump has and that he's had since he's been elected is that he doesn't want the bubble to pop. That's why he's not calling it a bubble anymore. He's not preparing people for the tough love. He's not talking about how government is going to have to reduce benefits, right? That people are not going to get what they've been promised. He's promising that everything's going to get better, right? We're just going to keep on winning and winning and winning, right? That it's just, now that he's elected, everything bad is going to be good. All of a sudden, we're going to have real jobs. We're going to have rising income. The economy is going to grow 4% a year, 5% a year. That's impossible. It can't, not on this phony foundation. We can't build that kind of economy on this foundation. We have to let this foundation collapse, and we have to rebuild a real one. And we're not taking any of those steps. Trump is not preparing people for those steps. Now, I know there's a school of thought out there. People think, look, we don't actually need real savings, right? We can just create money. The deficits don't matter because, we can just keep printing money, and it doesn't matter. We could just keep borrowing because we're never going to have to default, right? Because as long as we're borrowing in our own currency, well, we can always print it. There's nothing that stops the Federal Reserve from printing money, so we can have as much debt as we want, and we never have to default. And I guess in theory, that's true if you're willing to completely destroy your currency. Because if the markets believe that that is what you are going to do, right, that you're never going to pay off your debts, you're never going to reduce your debts, that you are going to just print forever, then you will have a currency crisis. And the only way to stop the currency from becoming worthless would be to massively jack up interest rates in a huge, huge way. And then you're going to just have devastation. The idea that we can, borrow indefinitely in our own currency without destroying the value of that currency, see, that is the problem. And that's the reason that you want to get the deficit under control before our creditors figure out that this is our end game, right? That's the reason you want to avoid the potential of hyperinflation. So you have to act responsibly. You have to reduce the debt or balance the budget now. You can't just take the attitude that we never have to do it. We don't have to worry. And the people who are worried about deficits don't understand that we could print money. They do understand that we could print money. That is the problem. That will be the death of our currency. We will print it into oblivion. And the reality is what's really holding up the dollar now is people don't think we're going to print it into oblivion. They think we're going to get our deficits under control. They think we're going to cut spending. I don't know why. I don't know why anybody would think that any U.S. politician is going to act responsibly if they don't have to. It's only the crisis, when they have no other choice, when all the other politically expedient options are exhausted, that's when they do the right thing. And even though Trump is a different president, maybe, it's the same Congress, right? These guys have been there before, right? And they know how the game is played. And I think now that Trump is there, he becomes part of the game, just like Ronald Reagan. I mean, Ronald Reagan probably wanted to cut government more than Donald Trump, for sure. He did, and he didn't. Government grew and grew and grew. So we'll see what happens. But most of it now is on autopilot anyway. Nobody wants to cut it. So you can't just keep borrowing forever. And of course, real savings just can't be manufactured out of thin air by government. We don't want the government to try to replace legitimate savings, because in order to have real economic growth financed by real savings, you have to have underconsumption. That's how the resources get freed up. Just because government can pretend that it's creating savings by just manufacturing it out of thin air with a stroke of a pen doesn't mean it's legitimate. And what's happening to the economy is you're getting malinvestments. You're sending false economic signals to the economy. You're misallocating resources. You're creating bubbles. This kind of government, funny money engineered out of thin air doesn't replace legitimate savings. Legitimate savings leads to real sustainable economic growth and rising living standards. When you try to replace actual underconsumption with a printing press where nobody sacrifices, nobody saves, and the government just creates money, all you have is inflation. And in the short run, inflation can feel good. What's that, that analogy that Warren Buffett made about peeing in your bed, right? He says, you could pee in bed, and initially for maybe a few seconds, right, it feels good, right? Maybe it's like a relief, right? Oh yeah, but then as soon as you realize, that you just, soiled your sheets, now you have a complete mess that you have to deal with. Despite the fact that for a few minutes it felt good, it would have been better just to get out of bed and go to the bathroom and not have to deal with the mess. And of course, that's the same situation here. Yes, inflation can feel good until you have to deal with a mess. And it feels good when the stock market's going up and the real estate market is going up and it seems like everything is here for free. Everything is awesome. Until the bubble burst. And the bubble burst in a big way in 2008, but you know what? We ain't seen nothing yet. That was just a small tremor, unfortunately, because we didn't allow the restructuring to continue. We interrupted it with this massive bubble that we now have that belongs to Donald Trump.
We are in a big, fat, ugly bubble.
Right, this is now Donald Trump's bubble, and I wish, as I said before, he would still call it a bubble, because he needs to put the blame on Obama. He needs to put the blame on the Fed. But by tweeting out that this is great, by embracing the stock market, he owns it. Now if it goes down, it's his fault. Now if it pops, it's not a bubble, it's, oh, what did you do to ruin this great bull market? The left, the media, is ready to pounce on Donald Trump when something goes wrong, right? The stock market goes down, they're going to blame it on him, so he should be out in front. He should be saying, yeah, the stock market is going to go down because it's overpriced. It's too expensive. That's part of the solution. That's part of making America great again. We have to have a real stock market, not a bubble. We have to have a real bond market. We have to have our real estate market. We have to have legitimate savings. We have to have real income. People have to spend out of income, not out of debt. We don't want consumers going into debt. We don't want them borrowing money to buy things they can't afford. We want them saving money. But this transition, right, is not going to be very pleasant based on the experience of the past. But he is not doing that. He is not saying that. And that, again, is just going to fuel the trends that I talked about earlier in the podcast of a falling dollar, of rising commodity prices, rising consumer price inflation, which will undermine real incomes, undermine the real economy, and undermine this stock market bubble.